Everyone, I'm Kapil Mahini, co-founder of Freedom Advisory, as well as leading the indirect tax practice of GST Expertise, Indirect Tax Division. So today we have gathered to discuss the impact on the businesses and what are the related aspects which are linked to the GST and which the company or professionals as well as the industry personals have to see while analyzing their transactions as well as closing or taking certain positions for various aspects in the company or for their clients. So this theme presentation of approximately 9 days which we are taking, wherein today it is a presentation on the GST, and the next few days we'll be covering the next tomorrow it will be more on the presentation on foreign trade refunds and exemptions. The industry personnel can very well. I request everyone to kindly mute so that everyone can listen. Thank you. I request everyone to kindly mute. Thank you. Sushil Gupta ji, kindly mute from your side. Akhil Gupta ji, kindly mute from your side.
जी बहुत गर्मी लग रही है। लो ना, कुछ नहीं करेगा। लो।
Agarwal ji, kindly mute from your side.
Kapil, who is the host? You are the host or you are the presenter?
No, I am the presenter, host.
Wait to mute everybody. Can't we do that?
I think there is.
Okay, let's start.
I think I request everyone to kindly mute.
I think there is some technical issue. We're just sorting out to mute everyone, right? So a session can be a delay for another 1 or 2 minutes maximum. Just participant just hold for another 1 or 2 minutes. Sorry for the inconvenience.
अरे चाचा ये बोलता है ना कैरी फॉरवर्ड लॉस हाउस प्रॉपर्टी कैरी फॉरवर्ड लॉस pertains to attributable to any of the deduction above. तो हमारा जो हाउस प्रॉपर्टी का लॉस है वो इंटरेस्ट ऑन हाउसिंग लोन से पर्टेन कर रहा है एक डिडक्शन से.
going on? What is, excuse me, what is this house property we are discussing on this forum? Kindly please mute. Kapil, shall we start?
Yes, sir. Please start.
Just we are starting.
छेद क्या होता है? ये तो नहीं मेरे को पता होगा छेद क्या होता है.
Shall we? Your voice is not audible. Hello?
Is my voice audible now?
Now it is audible. Now share your screen.
Yes. Thanks.
Yeah, yeah. PDF. So let's start it.
Thanks, everyone, for the patience. So let's start. We'll directly come out to the concept on which we have a presentation. So the government has, in this starting, Ministry of Law has recently issued a ordinance bill wherein they have introduced a new section 168A, which has bring various relaxations, special powers to the government to introduce various relaxations under the GST law. So we'll be covering first what are the relaxations in terms of the timelines. Will not take much time to discuss this. The first relaxation is with regard to the interest for the late filing of GSTR 3B. So essentially the due date of filing of GSTR 3B is the next month from the pertaining month. That is, if we talk about for the month of Feb return, then it was 20th of March, and March it was 20th of April. Since we are sitting on the for the due date of March, which was originally 20th of April, the government has given a relaxation of 15 days from the due date that they can pay the taxes without giving any interest to the government. So if the turnover, so specifically we'll talk about more from the point of view of turnover of the assessees which are more than 5 crores, wherein this relaxation has come. And so if you file your return on or before 24th of June 20, then in that scenario, there will be no interest if you file your return within the span of 15 days from the due date. So let's suppose 20th of April is the due date, and so you can file your return up to maximum of 5th of May without any interest. And if you will file return of the GSTR 3B after 5th of May but on or before 24th of June, in that scenario also you will save your interest to the extent of 9%. In that scenario, it will be only 9% which will be levied. And if you will file the return after 24th of June, then the interest shall be levied at the rate of 18% from the due date of filing of return, that is of 21st of April. So we have also covered this instance. So if the due date of April, which is 20th of May, should be filed latest by 4th of June.
सारे सेंटर्स में है ये, सबर्बन में है ये टेस्टिंग, सारे सबर्बन टेस्टिंग में है, गवर्नमेंट ने अप्रूव किया हुआ है, अथॉराइज किया हुआ है, तो उसके नजदीक में अगर सबर्बन सेंटर होगा तो यू कैन गो देयर आल्सो.
So this is the first case. Second is with regard to the restriction of section. So there is a section which talks about that you can only take a credit of the unmatched portion up to 10%. So if there is an unmatched credit, then you can probably take a credit up to a 10% of the match credit. For the period till September, the government has relaxed this provision, and the credit can be claimed without looking at the aspect of 10% of the match credit portion. So this is a very welcome benefit for the industry, wherein certain vendors are filing or will not be filing their returns. In that scenario, the government will not restrict the credit for the industry professionals if they have not filed their return and the matching is not being done. So they can take a credit till September for the period. The third important aspect which we are covering is with regard to the TCS returns. So the TCS return, there is a relaxation which has been come up under notification 35/20, which talks about that TDS return, ISD return, and non-resident taxable returns persons are the due date of filing of returns has been relaxed. But there was the ambiguity with regard to the TCS returns. So in order to avoid the ambiguity, the CBEC has clarified that due date of filing of TCS return for the relevant period is also 30th of June. So the ambiguity with regard to the TCS, and similarly the payment is also being, the due date for the payment is also being extended. However, there is no such clarity with regard to this aspect, but the government should likely come up with a clarification to also cover the aspect that the due date of payment is also linked with the due date of filing of return, which has been extended. So now there are certain assessees which are in the process of filing of their refunds or appeals for which the due date has been lying during this period between 20th of March to 29th of June. So government has said why the notification 35, which is a master notification on account of COVID, which talks about that last day to file the returns has been extended to 30th of June. So if in your case any reply or any show cause notice or any refunds for which the due date is lying within this period, then the authorities cannot invoke and reject their applications on account of the delay. It also includes the LUT provisions. So now the LUT which the company is already having for the period of 1920 is also being used for the period 2021, and the LUT reference, the LUT number has to be used while quoting their invoices to their clients. Now this is a very interesting aspects we'll cover right now. So e-waybill expiry. So there are certain cases wherein the e-waybills were issued during the period of 20th of March to 15th of April, and the validity of such e-waybills were expiring. So government has issued a notification. They have relaxed that any e-waybill which are expiring during this period, that has been automatically extended till 30th of April. However, there is no any clarification or notification which has come up for the e-waybills which are generated post 15th of April, since the lockdown has been continued till 3rd of May. So there is a likelihood that the government will release any notification on this aspects as well. Now coming to the aspect of the third, which is advance. So if you see that in the COVID period, what is happening is that the advance which has been received by a supplier for a service contract, which subsequently got cancelled, and the invoice has been issued along with the payment of GST to government by the supplier before the supply of service. So assuming कि किसी ने एक banquet का function book कराया एक अपने पार्टी के लिए, and in that
कपिल एडवांस वाला फिर से करना, बीच में वॉइस चला गया था, एडवांस वाला टॉपिक फिर से.
Okay, so we are covering a situation wherein an advance has been received by a supplier for a service contract, which subsequently got cancelled, and the invoice has been issued along with the payment of GST to the government by the supplier before the supply of service. So I'll discuss this with the help of illustration. What happens is there are certain cases wherein the persons receive the money for the service which is likely to be done. So in that scenario, although technically in that case the receipt invoice, the receipt document has to be issued for the payment of GST instead of the invoice, but in certain level of contracts, the assessee always use the copy of invoice to pay the tax as well as to issue to the customer. In that scenario, we can take an example of Pandal Shamyana service, wherein the any Pandal Shamyana for any party, the banquet hall receives an advance from a certain assessee, wherein to do any performance of to do any party, let's suppose during the period of COVID period. So in that scenario, that party will essentially cancel the contract, or they will defer the contract. So if they will cancel the contract, then what will happen to the amount which on which the amount has already been deposited to the government? So 1 lakh was the contract value, and a party banquet hall has received 50,000. So in that scenario, the 50,000 can be issued by way of receipt document, receipt voucher, or the party could have done, which is generally a common practice, they issue an invoice to the customer for the receipt of 50,000 and also to pay the GST. In such scenario, what will happen is that in case they have issued the copy of invoice to the customer, then to cancel that, they can issue a credit note, and that credit note can be used to offset against the liability So what will happen is, if you have issued the invoice to your party and they are cancelling the contract, then you can issue a credit note against that invoice and adjust that tax payment which you have already done with your subsequent billing with any billing. So it's not that the subsequent billing will be against that particular. You can adjust your invoice or the excess payment against any billing via credit note, because it satisfies the condition of Section 34 of the GST Act that services were not completed. So credit note section's condition fully satisfies this. In case if the party has issued, the banquet hall has issued the receipt voucher, here the law is very, I'll say, so it's very important to see this case, that law has said that if you have received any money and you have received you have issued a receipt voucher, then in that scenario you cannot adjust via credit note. Then you need to issue a refund voucher. And if you issue a refund voucher, then the tax which was originally paid on the receipt document cannot be adjusted, and it requires to be taken back from the authorities by way of GST refund, which means that you need to file the refund application under the excess tax payment option, which is a time-taking process. So my request to all the attendees is to kindly see that if you issue any invoice, or you are actually issuing earlier the receipt voucher, then you should essentially issue the invoice rather than the receipt voucher, because in receipt voucher, if the parties cancel that contract, then you are supposed to go to the authorities and process your tax amount with a refund, which is a very hassle process. So it is important that an invoice should be issued rather than a receipt voucher. Now the next question is, goods have been supplied by a supplier under the cover of tax invoice. However, the same were returned by the recipient. Whether the supplier can claim the refund of GST paid or is required to adjust. So above scenario, we discussed about the case wherein the services were prevalent. Because in a service industry or in the service tax law provision, any advance receipt of money for the services is also required to be covered under the ambit of levy of GST, and tax is required to be paid, and the point of taxation is receipt of money rather than the point of tax of the service performance. But in case of the goods, the advance receipt is not taxable. So what will happen is that if you have received any advance, then you are not supposed to pay any tax at that point of time. If the party cancels that contract which has given you the advance, then what you need to do? Then you need to issue a document that the refund amount, because there was no GST implication on that advance. But what will happen if you have actually delivered the goods and the party wants you go and take away your goods back? Then in that scenario, you need to issue the delivery challan along with a credit note. A delivery challan will be issued to return the goods from the recipient to the party who have actually originally supplied the goods for the movement of the goods. And the credit note will be issued to adjust the tax payment if originally the invoice was issued to the party. During this COVID discussion, there were certain queries which were coming from the industry, that what will happen if the goods were stuck, they gone beyond before the COVID period started, and the transporter is carrying that goods and they are stuck somewhere before the delivery. For that stucking part, the government has issued the relaxation which we have already discussed above, that e-way bill which are issued between this period, their validity has been extended till 30th of April. So that aspect is very important to understand, that your e-way bill is not expired. The second important aspect is wherein the party cancel the contract of receipt of the goods and you have supplied via your transporter. What will happen to those cases? In such scenario, what you can do is you can call back your goods from the transporter by way of issuing a delivery challan e-way bill, and the e-way bill will be issued accordingly from the transporter, although the goods have not been reached to that premises. So delivery challan will be issued from the premises wherein the goods are actually there, and will be received back to your premises at your address, and the e-way bill will be accordingly issued for the movement of the goods. Now, another important point industry is asking is, there are certain retail trade, there are certain traders who have not their stock, whether the stock, there might be a stock which are perishable. There are certain stocks which can become obsolete on account of expiry or other reason. Then what will happen to that stock? Whether the department will ask us to reverse the credit, and if they will ask us, then what all things we can safeguard, so that if they will ask us, then we have a ground to establish that ITC cannot be reversed in such scenario. So this is very important aspect. I request everyone to listen very carefully. What section 17(5) talks about is ITC is not available in respect of goods stolen, lost, destroyed, written off, or disposed by way of gift or free sample. So let's suppose your goods which were originally you were selling before the COVID period or at ₹100, and after this COVID period or during this COVID period, you thought that it is better to dump those goods at a lower discount price to your customer or a possible customer, and you think that if I have purchased that goods at ₹100, and if I am selling at ₹50 at a loss of ₹50, whether I'll be eligible for my entire credit on which I have procured at ₹100, or I have to reverse a credit to the extent proportionate of the loss. So let's suppose 100 was the value of goods on which we purchased, and the 10% is the duty, and ₹10 is the GST credit. And if we are selling at a 50 at a loss of 50, so that our goods can get sold in the market even at a lower price, and so the 50% loss of the credit, whether it will be required to be reversed, the answer is no. Because under the GST law, there is no provision which talks about or which restricts your credit if you are selling at a loss. Although in the pre-GST regime, specifically for the VAT assessees in various states, this provision was categorically mentioned that if you are selling your stock below your purchase price, then you need to restrict your credit to the extent of sale price and reverse your credit. But under the GST, this provision is not there. So even if you are selling at a ₹1 to unrelated customer, that means you are eligible for your 100% of the credit on your procurement. So all those persons who are thinking to give a heavy discount, this is the answer to them, that you will not lose the benefit of credit on which you have procured your goods. And also, if there are certain assessees which will see that I can sell it at 1+1, or I'll sell it at 1+2 or 2+1, whatever be the scenario. In those cases, my request to all the professionals is that you need to see very carefully that how you are giving that discount. If you are giving that discount by saying that it is a free item without assigning any percentage, so let's suppose you are giving 1+1 free. So one way of thinking is or looking at is that you are showing one as 100 rupees and the other as 0 rupees. Or other way of showing it as 50 and 50 by showing 50% discount on both the options, both the items. So it is a way of reflection, but this reflection will specifically give you a benefit that you have not sold anything at a 0 value. Although there are circulars which give you the benefit even in such cases wherein in an invoice that 10 items are sold and the 3 are of a 0 value, then also you can take a plea that we have a 1+1 and the consideration which we have received for the other goods include the consideration for the other goods as well. To avoid that ambiguity from the first level officers, we suggest that you should ideally manage all the sale invoices in such a way that it will reflect that you have attributed any value to any particular item rather than keeping it at a 0 value. Now, coming on the case of impact on billed and unbilled revenue. This is the one question which has been widely asked on various platforms as well as various discussions. So listen it very carefully. What is the meaning of billed revenue and what is the meaning of unbilled revenue? The billed revenue means when you have issued your invoice to the customer and the GST has been deposited. So let's suppose you have issued the invoice in the month of Feb and you have filed your returns of GSTR 1 in the month of March without actually filing the GSTR 3B. So these are the cases wherein the GST invoice has been issued, the series has been reported, everything has been done. Even if you have not reported, we assume that a bona fide assessee will not do anything which will hamper or tamper any of the invoices which has been issued. So covering all those cases which are genuine cases wherein invoice has been issued, what they are supposed to do, and if their customer are saying that we don't want an invoice in such cases because they are saying that we are not in a position or it is your milestone to take an acceptance from us before issuing any invoice. We'll discuss what aspect you need to see. So I'm talking of the problem because this is a very basic problem that there are businesses have issued the normal invoice which they were issuing in the normal course of operations in the month of Feb. On account of this COVID, the parties have said that we will not be giving you payments or we will not accept such invoice because during this period we are not accepting any invoice. Then what will happen to those invoices which you have issued in the month of Feb or March? What will happen? Whether I have to deposit tax, if we have deposited that, what I have to use. So I'll discuss. Second aspect is unbilled revenue. Unbilled revenue means that you have provided the service, but the milestone for the issuance of invoice has not been done. So assume karte hain that the service got completed on 20th of March, and in a normal trade practice we were issuing the invoices up to the 25th of once the completion is done. So let's suppose 25th of March was the date wherein the invoice was supposed to be issued, but that were on a condition that the person who is receiving the service, or I will talk specifically from the service point of view because in the goods everything has to be with invoice. So in that scenario, what will happen to that when the service recipient has not given us a green signal to issue us the invoice, which was a mandate mentioned under the contract which was agreed between the supplier of service and recipient, that whenever you complete your service, you take a permission from us to issue the invoice and then only you will issue. So it is one of the milestone. So now both cases are linked with the point of taxation and as well as the credit note. First of all, you need to understand what is the law says. So section 31, which is a point of taxation, the tax invoice. When is the tax invoice? Read with rule 47. Tax invoice should be issued within 30 days of the provision of service. So the law says that you need to issue your invoice within 30 days of the provision of service. And section 13 stipulates that taxable event arise on the date of invoice if the invoice is issued within 30 days of the provision of service, and if not, then taxable event arise on the date of provision. So if you have completed your service by 20th of March, then you are supposed to issue your invoice by 20th of April. And if you will not issue your invoice by 20th of April, then the point of taxation will trigger from the date of completion of service, which is of 20th of March. Now the ambiguity is, if we were supposed to issue and on a general practice, because we were issuing an invoice on every 25th of the completion, which happened on 20th, then whether the government will ask us to deposit the tax if we have not issued the invoice till 20th of April, what lacuna or what ground we can take in that scenario and what document we have to prepare, I'll discuss that. So here it is important to understand the term provision of service, which is defined above, is nowhere defined under the GST. So we discussed that a tax invoice within 30 days from the date of provision of service. The provision of service is not defined. When is the provision of service? However, the similar provision were there in the service tax regime. And the terminology was completion of service over there. The intent of both the sections were same. That provision of service and completion of service are more like a synonym terms. And hence one can say that the intention of law in both the service tax and GST, therefore position remains the same. So in the pre-GST regime, in the service tax laws, there was a circular, circular number 144, which said that completion does not mean only the actual completion of the service. Completion, so this would include, if you see this would include not only the physical part of providing the service, but also the completion of all other auxiliary activities that enable the service provider to be in a position to issue the invoice. And such auxiliary service could include activities like measurement, quality testing, which may be essential to raise the invoice in order to come under the ambit of completion. So the test of determination whether service has been completed would be the completion of all related activities that place the service provider in a position to be able to issue the invoice. So if in your case contract has been executed, that if in your case the contract has been executed between the parties, that the other person can raise the invoice subject to the condition that recipient will give a note to the supplier, then you can very well use this clause, because the completion, although the service in your case has been completed, but the condition to issue the invoice has not been completed. So all those cases wherein even you have not made a written contract or you have not made a written clause specifically focusing on this, then it is my advice to you that get that executed between the parties, so that the authorities will not come to you for the regular services which you are doing and saying that why you have not issued the invoice as per the law, as per the time, and deferring it will actually making a loss to the government, because the point of taxation already occurred when the completion happened. Apart from that, there there is a aspect like a rental. So this is one of the common this is one of the common aspects which that when we are issuing an invoice to our associated parties or related parties, I'll say, and we are issuing a rental invoice to our associated. So let's suppose the promoter is having a ownership of the property, and they gives on rent to to their company, the private limited or any other company which they are operating, wherein they are the directors and they are running the company. And if during this period they will not issue the invoice to the related parties, then what will happen? Because in that scenario, even the consideration will come or not, then the government will impose. So if during this period they will say that we will not charge the rent because there are heavy losses, and so it is better not to charge the rent to the company because they are already incurring heavy losses. So there might be a scenario when the promoter will say that we will not be charging the rent. Then the authorities will come to you and say that because your transaction is covered under the Schedule 1, a related party transaction, you are supposed to pay the taxes. Because even if the consideration is not there, I can the valuation rules along read with Schedule 1 can be imposed, and you are supposed to pay the tax. So in such cases, my advice is you need to prepare a documentation which specifically talk about that during this period there was no service, there was no occupancy, and that to be seen specific to the case, that it is not a case wherein only a specific part or unit has been used. Even if it has been used for an essential goods category, then you can proportionate only to that extent. So let's suppose if you have a 1000 area square feet which you are using, and you during this period, COVID period, you are not able to use because you are not covered under the essential goods category or essential service category, then you are not supposed to pay any money on account of the force majeure clause which has been entered between the parties. And ground to take that benefit is that during this period we have not enjoyed the service which we are receiving. So you need to prepare a robust documentation to ensure that you can establish those facts that you have not enjoyed the service, and essentially there will be no trigger point of Schedule 1 which can be triggered in such cases. Now coming to the point of post-sale discount and negotiated reduced. This is again a very, very important point, because during this period there are certain which we have already covered in the above point, that if your party will say whether to issue a credit note because we have not received the service or the milestone has not been achieved, then what will happen? So I'll discuss on those cases wherein the invoices has been issued and your party is saying that we will not accept those invoices because either the milestone has not been achieved or we are not in a position to accept any invoice. So Section 34, which talks about the credit note provision, wherein one of the conditions to issue a credit note is that non-provision or deficient provision of the services. As we already discussed above, for the cases wherein the services invoices has been raised, then you need to make a point that you are satisfying the condition of Section 34 in order to issue a credit note against that invoice, because your party is not accepting that. And authorities will say that you are not satisfying to Section 34 because you have already completed your service. So you are not eligible to issue a Section 34 credit note, tax credit note invoice and the benefit of availing that. So you need to have a documentation, and as well as that the contract condition for issuance of invoice has not been complied, and it is not a case wherein we have actually completed the service, and that is why we are issuing the invoice. So your document should speak and marry with that section 34. Otherwise, the authorities will reject section 34 tax credit note on account of that it is not a case of tax credit note, and it might be one of the case wherein your recovery were in a bad debt situation and you are raising a credit note in order to get the benefit of tax. We'll discuss about the bad debt, what will happen to the bad debt. So a supplier can issue a tax credit note if they are issued within the timeline, that is 30th September, before the end of the relevant financial year. And also, since in this case the force majeure clause, which is generally agreed between the parties, if they have a proper engagement letter, that clause can also be used to issue a credit note. Otherwise, in other cases, if you are not satisfying and the other person is not accepting, then you need to take a loss of the tax which you have paid, which nobody wants. So it is essential that you should see those transactions and see the documentation so that you can not covered under the loss of GST to the extent of credit note amount. Second, the 14th situation is the taxpayer is writing off the vendor amount owing to cash crunch situation. What will happen to that such scenario? So let's suppose you are supposed to pay 100 rupees to your vendor, and you are writing off that amount because you feel that it is not to be payable, and you have made a agreement between within your vendor that this is something which you benefit by way of financial credit note. So your service provider is giving a financial credit note that, okay, we are giving you the benefit by way of issuing the financial credit note, and you are reversing your payables which you are supposed to pay. Then in that scenario, there will be no GST which will be arise on such writing off liabilities amount, because there is no provision or there is no trigger point of any service. There are certain aspects which people will say that agreeing to an obligation, refrain from an act, operate in a situation which are covered under Schedule 2. So my request is to everyone is that it is a settled judicial pronouncement by even the pre-GST and as well as specifically in the GST regime. Then there is no active service which was involved in such cases. And similar provision will lie to the bad debt. But in the bad debt situation, if you are making a bad debt to any of your parties, then the GST, whatever you have paid, will be a loss too, and you need to reverse your, that is something which you cannot avail a benefit which you can avail if you have issued a tax credit note situation. So all those companies which have to whom the invoices have been issued, you need to reanalyze. We'll discuss in the financial impact presentation which Devin Gupta will take, that what is the impact on all those debtors which you are making a writing of because the debtors are not making payment and they are saying that they will not pay even afterwards. So we'll discuss the financial impact, and I'm only covering the GST impact here. That GST impact is a loss to the company, and they need to see whether they are eligible to issue a tax credit note, or a bad debt situation means a GST will be a loss to them. So this again point is the common point for the industries which are doing good for the noble cause under the COVID by distributing food, otherwise other things on account of COVID, as well as among which are manufacturing entities wherein which are covered under the essential, which are manufacturing the essential goods like the pharmaceutical sector, which are covered under the essential goods, and the production is on during the COVID period. And if they are distributing any food and other supplies, as well as they are giving anything free to their laborers in terms of mask and other things, whether the credit of those things will be eligible. So we'll cover these into two aspects. If you are using it and you are giving it to your own workers, and if you are giving to otherwise as a way of CSR expenditure outside the company, So we'll discuss these aspects. We'll cover into two aspects. One, first of all, before discuss, it is important to understand that what is the definition of GST credit, which talks about. So the definition of credit is very is open, wherein it talks about that input can be availed if it is used or to be used for furtherance of the business, and there are certain credits which has been categorically blocked under section 17, which even includes any gift, sample, as well as specific case of outdoor catering, food supplies, which are being given. So first of all, you need to see the question, the case one. Many citizens and business houses are providing food, medicine, and other daily supplies to the workers and poor people who have become victim of the lockdown. So this is more like a CSR activity. With regard to the CSR activity, even in the GST, there are advanced rulings, I'll say, wherein it has been said that GST credit will not be eligible. But in the pre-GST regime, as well as since it is a litigative case, I see from the point of view advanced rulings it is only a precedent which anyone can. They can litigate those cases, but it is our personal viewpoint is CSR expenditure if company is incurring on account of the mandate under the Companies Act, then it is one of the essential activity to run the business within the boundaries of law. So CSR expenditure, it is one of the aspects which we have also covered in our GST input tax book, which we released in 2018 and further in 19. That CSR expenditure are inward supplies and are in the process of furtherance of the business. A company which is incurring the CSR expenditure only because it requires the provision of governing law, that is Companies Act, and sustainability of the company is dependent upon CSR, without which companies cannot operate smoothly for a long period, as they are dependent on various stakeholders to conduct the business in an economically, socially, and environmentally sustainable manner, transparent and ethical. Thus, it can be said that CSR expenses are in the nature of course of the business. And this view is affirmed by Honorable Session Mumbai in the judgment, wherein it has been said it is CSR is not only a holistic approach, but it is integrated the core business strategy, since it is address the well-being of all stakeholders and not just the company shareholders. So this specific question we have covered in our GST book, page number 247, but we are just reiterating for the. So government should ideally come up with certain level of measures wherein if someone has procured or used for to do any such level of activities during this period, they should give the benefit. But even otherwise also, we are of the view that if a company is doing, then they can avail the benefit of credit, and then the authorities may litigate and the relief can be availed at a higher judicial level. With regard to the second case, if the above are bought to feed the labor of manufacturing plant, pharma or essential goods as per the COVID, as per the directions of the government. So in the GST law, the section 17, wherein it has been said that credit will not be available if you are using, if you are doing any, if you are procuring and giving it for free. So I'll read for the benefit of the audience that wherein it said that input tax on the food and beverages shall not be available. However, the input tax credit in respect of goods or service or both shall be available if where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. Since the COVID period specifically gives you the condition to operate when you need to feed your employees, as well as if there is any specific condition to do operate in your city or state, then you need to use this provision to avail the benefit of such expenses which you are doing. With regard to the other expenses like of mask and other, that is a essential, that will not be any challenge. But specifically from the point of view of the food and otherwise, for the industries which are operating during this period and feeding the employees for the 3 course of meal, then they will be eligible, which were earlier not available for them because there was no law during that period. The factories had to feed them. So during this period, since it is a specific case, there is a provision which can be used to avail the benefit. So we'll not take much more time. So there are certain good aspects, the forfeiture of security or refund deposits. So if you are forfeiting any security or refundable deposit in the rent of and adjusting with your rent, then the GST is required to be paid. And the second important aspect, when GST is not required to be paid, that is important. Advance in respect of the goods. If you have received any advance and you are forfeiting that advance, then the GST is not applicable on that forfeiture because there is no supply which is happening when you forfeiting any advance. Other important aspects is ITC reversal if the payment is not made within 180 days. Then during this period, the section, the notification 35/2020, if your period of 180 days is falling during this period, COVID period, then you can take the benefit of this notification and not reverse the credit if the credit expires within 180 days. If the payment has not been made to your vendors within 180 days. Another important aspect is inventory which is lying in transit and suddenly lockdown was announced. Now the goods have not been received. So the ITC on such cases will not be available and you can only avail the credit once the goods has been received. So in the treatment of ITC where partial payment is made to the vendor. So if suppose you have made a partial payment to the vendor before this lockdown and the goods were also received or the service were also received, then your receiving party is saying, sir, we will not make the payment and it is more like you have the benefit. Then in that scenario, you can issue a financial credit note and take a loss of GST, and the other person who is receiving the benefit are not supposed to reverse the credit because the consideration definition includes otherwise. Otherwise, it might include the financial credit notes, but that is a point which you need to see very carefully. Then the treatment of inputs, capital goods sent for job work and wherein the goods has not been received, then again the benefit of relaxation can be availed. Then again, an important aspect which is generally seen as the goods sent on approval or for sale or return purpose. If your 6 months are, because in a goods sent on approval purpose, if your 6 months expired, then the point of taxation triggers on the date of completion of 6 months or the issuance of invoice, whichever is earlier. So if you have not issued the invoice, then you are supposed to make the payment and there is no benefit. Although what you can do is when the e-bills, you can issue a e-bill with a delivery challan back on 15th of April and the extension of e-bill is 30th of April. There is a likelihood that they will also extend this validity as well. So you will be supposed to pay the tax amount if your 6 months expiring on 15th of April or before. That is all about the presentation. Now, the questions, I can take up the questions. If anyone is having the questions related to the GST, I'm happy to take it. Devin, have you seen the questions?
No one has as of now raised the question. They will start raising the question.
I think someone has raised a question on e-bill. What about the e-bill issued before 20th of March and goods are either
bank charges? There's a question whether ITC on bank charges will be available based on the bank statement issued by the bank.
Yes. So the credit will be available on the bank charges. So there is no challenge to that aspect.
Sir, can I ask the refund in case of debt, whether there will be credit. In case of
Sorry.
bad debt, services bill.
In case of bad debt, there will be no benefit of. So if a bad debt is more from the point of view of supplier, then there will not be any. That is a loss to the supplier, and there is no adjustment which can be done by the supplier. And in respect of the recipient, who has either the goods or as well as the services, then they are not supposed to take the credit, and they are required to reverse the credit because the condition of 180 days hits that aspect.
There's an interesting question that raised by Archana Jainji, that on ITC on CSR is available as per your view, but section 17 subsection 5 will not be hitted. So this is the question raised by Archana Jainji.
So in that aspect, so first of all, you need to understand section 17.5 gives the definition of anything which is of a gift. We have already discussed that aspect in detail, that giving any items which are essential to cover under the ambit of CSR, to do the CSR activities, as per the company law, you are supposed to do. If you will not do, then your company is in a default. So gift, if you read the definition of gift under the General Meaning Act, so the CSR activities are not, and that is the same principle which even the judgment Honorable State Mumbai has taken, which has given a clear judgment that expenditure incurred for CSR activities by the company will be eligible for the GST credit, and it is not a case of gift which are covered under section 17 subclause 5.
In case of ITC, how we will get the copy of invoice for claiming the ITC bank charges? I think bank statement itself a invoice. No, bank issue a invoice on month-end basis. This is the, I think, question they are having around at ITC on bank charges. So please clarify.
So with regard to that, I would suggest there were certain relaxations in respect of issuance of invoice on a monthly basis, which has been given to the banks as well. That can be referred.
About the commercial credit note, credit is required to be reversed by the recipient?
So this is a widely asked question in the retail trade industry, wherein the commercial credit notes has been issued by the supplier to the recipient. But generally, industry takes such commercial credit note as more from the point of view of a benefit in terms of the payment adjustment. But there is another side of this as well. There was a circular which was issued wherein it said that if a financial credit note has been given to your from the supplier to a recipient, then it is one of the consideration which the recipient is taking from the supplier. So in that scenario, the commercial credit note, if it has been issued, then the recipient essentially is not required, because they can avail the benefit of consideration. So consideration definition includes money or otherwise. So this case comes under the ambit of otherwise, and they can say that they have made the payment to the supplier by covering under the ambit of otherwise. So GST credit will be eligible.
The next question is whether any GST Council has issued any guidance on this COVID-19 as of now on these kinds of issues.
So there are certain aspects, but not related to any clarification from on all these aspects which we have covered, except there are very few on one or two aspects with regard to the advance received and refund voucher, which we discussed initially in the second or third point. But apart from that, there are no such clarifications which has been issued by the ministry, except the relaxation which they have, and that is also very technical for the industry professionals. Any other point?
Ask another question, that whether a bill is required for causing the movement of goods from custom to from custom ports to outside India by ship. So basically, he wants to move the goods for export purposes, but can he issue a e-way bill in between for sending those goods? or is there any relaxation?
So for the e-way bills, there are no e-way bills which are required for shipping any goods outside the country. So in that scenario, there is no e-way bill if you are shipping outside the country. From the standpoint of view of e-way bill, there is only a requirement to issue a e-way bill from your factory or manufacturer or your premises to the custom port. That is the only e-way bill which you are supposed to.
Any relaxation has been given from the law perspective for COVID period?
Apart from the other benefits which we'll discuss in terms of the relaxation of timelines, as well as in terms of the financial benefits from the banking norms, which we'll discuss in the loan syndication, which will taken by Ashish in terms of the loan syndication, the benefit of loan impact of COVID on loan syndication. Apart from
The next question is whether e-way bill is required to be issued before 20th March and goods are in transit and they are lying at the transport premises. So what about those e-way bills?
so those e-way bills, I suppose, were issued before after 20th of March.
Before.
So if they were issued before 20th of March, so
transit or they are lying at the warehousing, but the time period of
so the law says that have been issued during this period. So what we should suggest is that you can extend the validity of those e-way bills by again extending those on account of by mentioning this reason, and extend those e-way bills specifically for those which were issued before this date.
Okay, should we need to create the provision for inventory for slow moving stock in the books of account and the corresponding credit thereon? That is the question.
So from the financial perspective, I think in the GST impact, when we'll discuss on the financial impact, then in that scenario you can take this question, but in the next, I think it will be on day after tomorrow for the financial impact.
The question is more of the GST credit availed on that inventory.
So more from the point of view of GST credit, you are not supposed to reverse any credit if you are making any provision, because till the time you write off such things, then only you are supposed to do. But if you are making any provision to do a provisioning, that is more. Let's suppose I even discussed that query that you have bought at 100 rupees and you want to sell it at 50 rupees. And even if you are making any provision, that provision does not make you, because you will sell that goods in a future course of time at some value. Assigning some value will give you a benefit.
Okay, the next question is, we are purchasing the goods like mask, PPE kits, and they are exporting outside India. So can we claim the input on these products? Pramod Agarwal ji has asked this question.
So can you repeat, Devin?
The question is, say we are purchasing masks and these equipments, and we are trading. We are a trader, and we are exporting them outside India. So can we claim the input on these products?
Yes, you can avail the benefit of credit of all those procurements which are being exported outside India. 100% credit will be eligible.
Okay. Can we take the ITC on purchases from e-commerce site, just like Amazon, Flipkart, though the invoice is in the name of Amazon or Flipkart?
The question I'm not able to understand, because till the time that they are
individual is purchasing, your company is purchasing through Amazon.
So till the time the invoice is a valid tax invoice and that has been issued by a GST person and issued to a GST person, the credit is eligible, provided that does not come under the ambit of block credit.
I think in Amazon there is a business account. If you registered in that Amazon business account, you can get the credit. This is a just suggestion. Okay, the next question is, supplier delivered the goods at the custom port and I exported the same to outside India. For that, whatever I need to issue, whether I need to issue a e-way bill for movement from custom port to outside. Okay, he's saying that I have a contract. So it's a question. Let me reframe it. So there is a vendor. As per the arrangement with the vendor has supplied the goods at the custom location. Now I am the intermediary, I am a middle person, I am buying exporting those goods. So do I need to create an e-way bill on that issue?
I missed that question, Deven.
So let me give the answer to Rajesh. Rajesh, already when goods have been delivered at some port by the vendor, he has already caused the movement of the goods. You don't need to create any e-way bill. E-way bill has already been created by a party who has already caused the movement. But alternatively, if the party is not knowledgeable enough to raise an e-bill invoice, you can be a party and just create the e-way bill, in which you need to mention ship from the location of the vendor and ship to the port. I think I have answered your query. Whether the waiver of interest on loan will be considered as a consideration?
No, there will not be any because there is no active service which will be involved into that. So that is a clear answer. The waiver of interest will not be covered under the ambit of GST.
Whether representation to be submitted to the authority related to e-way bill for not delivering the material for lockdown period?
I don't think that any. So representation has already been sent from various committees as well as I understand from our IC as well, which. But I think any extensions on the because there that has not come after the 15th April. But since this relaxation, this COVID period, the lockdown has been extended, so there is like that extension will surely come.
Okay, I think we have answered almost all the questions raised, but still I can understand questions इसमें छूट गए होंगे. एक जैसे इससे DA आ रहे हैं, बोला कि interest on loan will be considered as a consideration अगर waive off होता है. As per Kapil's view, it will not be considered as a consideration under the GST framework. Let's not talk about finance.
Yes,
I think we have taken all the question almost raised by the participants. But still, if you have any other questions, you can reach us out at kapil@gstexpertise.com.
Hello. Kapil.
Hello. Yes.
Kapil.
Yes.
Are you hearing me?
Yes, sir. बताएं.
मेरे को इसमें ई-वे बिल पे आप थोड़ा सा करेंगे because I am not getting exactly. Hello.
Yes, sir.
You have now e-वे bill generated during the 20th, 15th April, but if case is that goods are lying still at the warehouse of the transporter and e-वे bill generated before 20th March, then what will be the situation? You have to generate another or what?
You don't have to generate another. What is we are suggesting to the party, if you have done before that, then you can tell your transporter who is assigning a Part B responsibility to extend the e-way bill validity for further period on account of by using the other option. There is a reason for delay, and if you can put the other option, and then that will allow you to extend the e-way bill.
Okay. ठीक है.
Kapil, can you? Okay. So I am really thankful for all the participants for this attending this, and in the coming week we have another set of events that will primarily. Kapil, can you bring that first slide?
So
that is going to cover additional topics.
So tomorrow we'll be covering more from the point of view of foreign trade policy, MEIS, SEIS, and other benefits, as well as what is the relaxation which has been given by the government. Then we'll be covering the direct tax. Priyanka is a expert into direct tax, and she'll be covering as a EY. Then on the 4th, we'll be covering the financial because the financials are getting closure. So we'll be covering, and this will be taken by the Devin Gupta, who is an expert on the assurance sector. Then it will be valuation. Since in this there will be valuation aspect from the point of view of company valuations. Anchal, she's a valuation expert and registered valuer. She'll be taking in that session, and then impact on the loans. What will the impact on loans by Ashish Mishra, who is a debt syndication expert, and then one session by me on the refunds under GST. What all things you need to do. Then Mukesh Ladda ji will take up the reconciliations. What all the reconciliation you need to do, And lastly, again by Mr. Ketandi, that what all schemes which the government has introduced to manufacture to boost the manufacturing operations, specifically after this aspect as well as before this. So all these sessions are between 5 to 5:45. I request everyone to kindly attend those sessions by eminent speakers. Thank you. If any discussion, request you to put your email at kapil@gstexpertise.com. Thanks, everyone.
Okay, thank you.
Thank you.
Thank you.